Let's go talk about commodities now, where we have seen the gold prices continue to trade below $1,300 per ounce, and there you have it, 0.25% down even as at this point in the markets. But the flip side is that you have seen good gains coming in for the Indian markets, and that of course is because of the rupee depreciation. Ditto is the case with the other commodities as well, in case of crude and base metals as well. How do you trade all of that? For that, let's get in Harish Kalipelli. He's head commodities and currencies at JRG, and he joins us with his expert take as well. Hi, how would you look at, Harish, gold and silver prices right now? Because while the international markets are declining, there's no much impact coming in for the Indian prices because of rupee calculation. How would you lay out your strategies for these?
Hi, Manisha. Good evening. I think it looks like, both gold and silver have resumed their downward trend, especially in international market, thanks to better than expected data from both US and Euro and unexpected rate cut from ECB last week. So I think down the line gold prices might retest their recent lows. However, in Indian market, as you rightly said, rupee is limiting the downside. But I think as far as strategy is concerned, the broad-based view is downside. So I prefer selling, keeping rupee positions hedged.
Vijay, how would you come on the precious metal space? Because it's the rupee really which is making the difference, all the difference rather in the Indian markets. Silver especially, how would you want to play that?
I completely agree with you, Manisha. It's the rupee that's blowing up precious metals on the domestic commodity exchanges, and silver, which is trading close to 48,500 levels, might just inch slightly higher. But I don't expect too much of a follow-up buying support emanating from the bulls, because the screen is not really showing any kind of conviction-based buying or any kind of exuberance that would belie the feeling in the bulls that if they don't buy today, they won't be able to get silver at these prices tomorrow morning. So I think come 48,900 odd levels, and you'll see selling pressure coming in and dragging silver down to sub 48,000 levels. I would still stay away from the long side. And leverage space was completely ruled out for me for almost a year now. I would still wait for those 46,800 odd levels to start bottom fishing in the physical investment space. At this point in time, I would sit on the fence where leverage space is concerned.
Well, energy is a different ballgame altogether, because we have the geopolitical concerns coming back. The Iran and the rest of the world talk hasn't really gone well. We haven't seen much of decision come out of that, and that's the reason you have seen premium building on that. Looking at that, Harish, how would you look at the levels now?
Well, Manisha, if you look at crude, I think market has been declining for last couple of months or so. I think fundamentally market is adequately supplied, and as you rightly said, again on a political side there could be some premiums going up, but I think in short term I feel both rupee depreciation as well as political tension escalation might support prices. So on that context we prefer buying, and in terms of MCX crude we are looking around 6,060, 6,070 levels as a potential area. Beyond that, 6,100 should be a potential area upside.
Vijay, natural gas prices are holding around that 227, 228 mark yet again in the market today. Marginal gains coming in. Would you bet on further gains?
Manisha, some more gains quite likely, but the upside is likely to get labored. And especially as we head towards the 230 levels, I think the bulls will prefer to unwind their long positions. I don't see too much by way of fresh long build-up at current levels, because we've seen almost half the derivative cycle of the November future series run through, and the overhang of cost of carry will start to weigh down on prices. So if I get 230, maybe 231 odd levels, I would start to basically very cautiously short natural gas prices with a target objective of 224 to 225 odd levels to extinguish those short positions.
There has been a certain support coming in for base metals, Vijay, whether it's copper, nickel to an extent. Zinc prices also have been trading choppy in the market. There is positive data from US, and there are those individual fundamentals as well. For the very near term, how would you want to take that?
Manisha, I do remain optimistic on industrial metals, but at current levels I wouldn't really want to go out there and start buying, because a whole lot of buoyancy today is attributed to the currency aspect. I'm not really very gung-ho after the housing numbers or the construction numbers that have come out from the US industry. And failing which, I think there is a possibility of a percent and a half, or maybe slightly more decline in almost across the board in all industrial metals. So I would buy the dips rather than chase prices at current levels. I'm just not comfortable buying at the present levels.
Anything that you are picking up, Harish, in this level, I mean in this sector, something that you would want to trade on in sense of base metal prices?
I think both zinc and lead are looking pretty attractive, especially zinc. I think, there could be some supply side constraints going forward, especially on the maintenance of, maintenance side. So I think zinc could be a good bet going forward. And as far as day is concerned, probably copper can be bought for 460 to 460.
But to the agro commodities, and the sugar futures have declined today due to poor demand and ample stocks with mills, and many trade and industry officials believe that the contract could fall further in the trade. But the closing, of course, has been nearly 1% on the higher side, 2,900 on your screens. In pulses, you saw chana prices rising on value buying, though significant stocks and conducive weather for sowing and adequate soil moisture will restrict much of upside here. The guar seed futures, in the meanwhile, have seen some pressure to higher spot supplies and mounting stocks and sluggish overseas demand as well. In the edible oil space then, you saw the soybean and the soy oil futures rising on a weak rupee and on increase in overseas edible oil prices. The rapeseed futures in the meanwhile declined as the sowing of the winter sown oil seed gained pace in key growing areas. You also have seen the prices, or rather the soya meal, give you some sense of prices there. If compared to last year, you have seen the export of soya meal during October 2013 at 1.94 lakh tons, which is nearly 280% more if you compare it with the previous year in the same month. Let's get in then. Joining us on phone line to explain that is Rajesh Agarwal. He is spokesperson and coordinator SOPA, and he joins us from Indore. Rajesh, hi, welcome to the show. The numbers are quite on the higher side as far as the soy meal exports go. How would you look at the numbers?
Well, just to clarify, that we had an early season this year because of early rains, and the exports would have been much higher to about 4 to 4.5 lakh tons had the rains not been extended in October. So these numbers are not surprising. We were expecting initially more than 4 lakh tons exports in October. But because of extended rains and damaged crop, which was having high moisture and damaged beans, the exports reduced to little less than 2 lakh. But this is not comparable with last year, because last year usually the season starts after middle of October. But this time it started beginning of October.
Rajesh, how are you looking at the prices in soybean and soy oil? Because we've seen more gains than losses in many last few sessions now.
I think so. We are already having very high prices in India, and the prices need to either stabilize somewhere lower by about 100, 200 rupees. Otherwise, we'll not be competing with the foreign other competing nations, and we'll lose out on the export market. So we will have to see some corrections in a couple of weeks.
All right, Rajesh, we'll let you go at that. Thank you so much for explaining the numbers and, of course, giving us a price view as well. Vijay, but coming to you, and mentha oil prices really have seen a very strong rebound coming in. 2.5% of gain in the markets today. We were talking about it the other day. Are you looking at further gains from here?
I am, Manisha. I talked about how the onset of winter, or maybe a few weeks prior to the winter really hitting India, especially the northern parts, pharmaceutical companies start to acquire stocks of mentha oil because it goes into pain balms, liniments, cough drops and lozenges, etc. So normally in any other year, by this time of the calendar year, prices should have been 950 odd and above. I'm not really surprised you're seeing 2.5% rallies on a day-to-day basis. It's also seen gains in the last half of the previous week. I think the bulls are likely to build on to their long positions, and it's only a matter of time before the 920 mark is overcome.
Two spices, and we have seen a lot of choppiness come into that one as well. Harish, which one would you want to pick here, and how would you want to look at this space?
Well, Manisha, I think in spices, turmeric can be sold, and if you look at in the spot market also, I think enough stocks are there, and I think in terms of demand and export inquiries also concerned, I think some kind of slow nature we are seeing. So somewhere I think turmeric futures are likely to fall towards 4,600, 4,650 levels.
Vijay, how would you look at the pulses market now? Because there has been choppiness into that one. We've seen a bit of a marginal gain coming into during the day today, but as you have been saying, are you continuing to be bullish on that?
I think so, yes, Manisha. I think the last part of this calendar year might just see some volatility with marginal downward bias, but I would still maintain my view that come 2014, especially after the second half of January 2014 has run out, I would be surprised if Chana was not trading above 3375.
This one is to you, Harish, and how would you look at the rest of the edible oil space? Because while we are looking at bullishness in these markets, but as even Rajesh was pointing out, the industry believes that the prices have gained in any case much from here. At these current levels, how would you want to trade?
Manisha, I think edible oil space, I think soybean is one market where continued upside can be possible, but I think market has already discounted the crop damage and a delay in arrivals and all. So I think some kind of correction is what we are expecting. On this correction, probably one can enter with fresh longs for decent targets of 4,200 or so.